In recent weeks, we've heard so many people ask, is it a good time to buy stocks? We think so, and here's why. What's up, Legacy Builders? I'm Rob.
I'm Reshawn. And this is Learn, Hustle, Grow. We help you build wealth and explore entrepreneurship so that you can leave a legacy.
She's a travel agent.
He's a realtor.
And we are debt-free entrepreneurs.
We understand that investing in the stock market can seem a bit scary, even foreign to a lot of folks. Yep. So we are going to share a little bit about our experience investing. Our video intro to investing was created 7 months ago. And we know not everyone has been following us that long or has looked back at all those videos. So here's a recap of how we've used the stock market to help us move forward.
If you know our story, you know we're real estate investors. So we use the stock market to build up our down payments to buy our rental properties. And we'll continue to do so, hopefully.
Yeah, real estate is just one of the areas where we found having a stock portfolio really helpful. If you've seen our mortgage payoff story on CNBC, then you know we paid off a $300,000 mortgage in 5 years. Now, if you watched our How We Paid Off Our Mortgage video, then you know $50,000 of that mortgage payoff actually came from our stock market portfolio.
Mm-hmm. Also, in one of our most recent videos, we talked about how we use the stock market to grow our kids' 529 plan, and it was ready to go by the time the first one was going to college.
That's right. We have had an awesome experience investing in the stock market to achieve our long-term goals.
Mm-hmm. Recently, we saw a quote that said, "Everyone says to buy low and sell high until it's time to buy low." Mm-hmm. Everybody's terrified when the market is low enough to buy, but everyone always say buy low, sell high, right?
Yeah, honestly, in our current market, here in the last month, the month of March, we experienced some extreme lows. Mm-hmm. And that was an excellent opportunity to buy if you had the courage to do so. Right. However, it may not be your last shot.
Yep, we were just discussing that this market right now today is up for no reason, even though the job losses are going, getting larger and larger.
20 million was the last number reported?
Yeah, 21, something like that. But we don't know why it's going up. So we're afraid, and there's, and the jobs are still being lost. So we're afraid that it might not be its low. It might go back down. So it might be another buying opportunity.
I was going to say, are we afraid? The fact is, if it's a buying opportunity, then we all need to recognize it as such. Yep. The truth is, if the companies are going to report losses, which they should be, since people are not eating at restaurants or going out due to the quarantine, if the companies are going to report losses, how can their stock values be up?
That's true. That's true. And also, chances are we're not totally at the bottom, and we're headed for a recession. So, you know what they say, fortunes are made during times like this.
Absolutely. We actually have a video on the topic of getting prepared for the recession, and we hope you've watched that. But in the meantime, one of the things we were talking about is the fact that we always remember how we missed out on a stock when it was at its low.
Absolutely.
I'll tell you right now, we are in American Airlines, and we are in it for much higher than we would like to be now that these prices have come down.
Right.
But we also had the experience of buying American Airlines stock when it was 38 cents a share. Mm-hmm. So we have more than made our money off American Airlines because we actually sold most of it when it was at $44 a share. Yeah. So you definitely, have an opportunity to win, but there are chances to lose as well. Yeah. And at $21 a share, is that what we're in it for right now? We are losing on American Airlines. Right. But that's just one position in our portfolio.
Mm-hmm. Now, many of these other stocks that we've been waiting for them to go down are tanking, y'all. So this is an opportunity.
Tanking.
What are you going to do? Are you going to be bold enough to buy in while they're going down? Who knows?
Before you decide whether or not you are going to invest in the stock market, you need to decide to subscribe.
Don't forget to hit the like button and share.
While past performance is absolutely no guarantee of future results, we can look at the patterns we've seen in the stock market, especially during times of recession and downturn. What we do know is that the stock market has always come back.
Indeed. So here's what we decided to do. Just remember, We are not financial advisors. We're just two random people from the internet giving you our personal experience.
Not advice.
Experience.
As evidenced by our 30 videos in our travel playlist, we love to travel.
Indeed.
And we know millions of other people do too. It's our understanding, or our belief anyway, that after this quarantine is over, people are going to be anxious to get out. Yeah. With that in mind, let's talk about a few travel stocks.
Keep in mind, these are positions that we chose, and we know that we're going to have to hold on to them long term, and at least a year plus for them to get back to where they were, as long as they make it, right? So check it out. So let's look at Norwegian, guys. Check it out. So around January 17th, it was going for $59.78 at the high. And then somewhere around February 20th, when all the announcements were coming out, it started sliding, right? And eventually it got all the way down to $8.23 a share from $59.78 in 3 months. To me, that sounds like a buy. Of course, I'm no expert though, right? Today it's going for around $10.59. So we might have a little while, you know, if you're willing to take the risk. We definitely are. And what we like about this too is Norwegian has $253 million in cash. Yeah, they're doing a lot of layoffs and stuff, which is kind of scary. But I think that's probably to save some of that money, right? And they, hopefully can recover in a few months. Another one of our favorites is Carnival Cruise. Everybody's asking about Carnival Cruise because they're so popular and everything. So the same thing happened here. Around January 17th, it was going for $50.69 at the high. And then floating around the 20th of February, it started to slide all the way down. And it got all the way down to $7.80, y'all. That is low. Now it's popped back up a little bit. So if you bought it at the low, you know, you'd be already in a profit. So $11.44 today. And what we like about Carnival the most is they have a ton of money in cash. They have $500 million. So hopefully they don't burn all that up somehow. I don't know how long it takes if you had no business come in to burn that kind of money, but you know, they got $500 million they're sitting on in cash. So I think they're doing all right as long as they can get back going in a couple months, right? Last but not least is my favorite right now is Spirit Airlines. I don't fly Spirit, but I'll definitely buy their stock since they're so popular. And it's SAVE is their ticker. And same deal. Around January 17th-ish, they were going at about $43.65 at the high, which is really nice. And of course around the same thing, February 20th or so, it started sliding all the way down and they got down to $7.01. So I bought Spirit at about $9. I wanted an opportunity to buy more, but I thought that's going to keep going. It did not keep going down. So I feel good about the purchase, but I want to get a little bit more. I got more Norwegian. And like I said, we're willing to take that risk just in case they, tank. But those are really big companies, so hopefully they won't, right? What I like about Spirit the most is Spirit has $1 billion in cash they're sitting on. So I think they're going to be all right. That's definitely why I want some more Spirit the most, because they have all that cash.
You can purchase individual stocks in a traditional IRA, Roth IRA, or a brokerage account.
If you're interested in buying stocks and don't have a brokerage account, take these steps.
First, you need to choose a broker. Here are for you to choose from:
Fidelity, Vanguard, TD Ameritrade, Schwab, and Robinhood. We're familiar with all of them.
There was a time when brokerage companies charged a fee every time you bought or sold a position. The fees ranged anywhere from $5 to $10 and could really eat into your profits over time.
All of the companies mentioned now offer free ETF and stock trades. Most of them are well-known players that have been around for years.
A few people have asked us about Robinhood recently and whether or not they should use them. Let's talk about that for a minute. If you are new to the stock market, you might be enticed by the fact that they offer a free share of stock. Isn't that how you got involved with them?
Hey. So let's talk about what makes Robinhood different from the larger brokerages. In addition to charging 0 fees for stocks and ETFs, they also charge 0 fees for options. If you don't know anything about options, then check out Options Alpha on YouTube.
While Robinhood does not offer retirement accounts, mutual funds, or bonds, they do allow you to open a brokerage account with as little as $1. While most companies actually require you to have anywhere from $500 to $10,000 in order to open a brokerage account. Keep in mind that if you don't have $500 to invest, it may not be the right thing for you to do. If you just want to open the account with $1 and come back to it later when you have some money, that's always an option.
Here's where Robinhood is challenged. First of all, they're extremely new. They were founded in 2013 versus a Fidelity who was founded in like the 1940s. They do not trade international stocks, only the stuff on the New York Stock Exchange and the NASDAQ.
In recent news, on 3 of the biggest trading days in history, Robinhood's system went down. Unfortunately, they were unable to handle the number of trades they were getting. As a result, there are 10 million upset users, and some of them are planning to sue.
And unfortunately, Robinhood's customer support is limited to email and social media. Now, I don't know about you, but I like to pick up the phone and talk to people when it's involving my money. You know what I'm saying? We hope this answers a few questions whether Robinhood is right for you.
So you've made the decision regarding which brokerage company you're going to go with. Now you are ready to buy stock. Well, not quite yet. Before you can purchase a stock, you need to fund the account. This is a conversation I had with my mom recently. She was so excited and she was like, I'm ready to go. But it takes 3 to 5 days for the funds to settle in the account before you can get started. How do you fund the account? The easiest way is to connect one of your bank accounts to the brokerage firm. That way you can just transfer money between the two. However, you can also submit money via wire transfer or what else, babe?
Old school check.
There you go. Hadn't done that in quite a while. Couldn't remember it. Either way, you can do this online, or if they have an app, you can also fund the account using your mobile phone. Isn't technology grand?
Recently, I was having a conversation with a friend, and he said that he has Fidelity, right? He has been there with them for years, so maybe this has something to do with it. He wanted to trade on a big trading day and didn't have any money in his account, but his bank account is already linked up to his Fidelity account. He went to go trade like $5,000, and he said that it was instantly ready to trade on a big trading day, and he loves them for that. So I don't know, maybe, what do you think, baby? That was possibly because he's already with them. And
it could have something to do with the history of the account and just trying to respond to customer loyalty.
Yeah, because the money was definitely not settled on the same day, but he was like, oh my God, I can trade right now. I can buy stock right now. So it's probably a good idea to go ahead and be ready, have it already linked up, and then you'll be ready to go.
Absolutely. Open the brokerage account, link a way to fund it.
And just sit on it, yep.
There you go. When it comes to building wealth, it is always important to keep your tax implications in mind. Here's what you need to know about making money in a brokerage account. If you sell your positions and take the money before 1 year, less than a year's time frame, you will be charged regular income tax, up to 37%, whatever your tax bracket is. Right. Now, if you hold those investments for at least 12 months, over a year, then you actually get long-term capital gains tax rate, which is 15%.
Now that's
so, think smart.
You can pull the money out before a year is up, but it might not be worth it. You are on your way to possibly buying stocks at a very big discount and making some money over the next few years.
Are you investing in the stock market? If so, what are you buying? We want to hear from you. Comment below.
See you in the next video.